the market sort of around these levels. Because as long as inflation continues to come down without unemployment spiking, we're going to be in an okay environment.
I'm surprised, Jim, that you would make a declaration that this is the worst it's going to get when we know that the economic data is undeniably getting weaker.
That's not true. And she just said the Citigroup Surprise Index. You got to take it in its totality.
Okay, so
the Citigroup Surprise Index, which measures the totality of economic surprises, has been moving up.
So the economy is getting stronger.
No.
It's not getting weaker?
No,
Is that what you're saying?
Versus expectations.
Well,
is that what you're arguing?
Because
I mean,
versus expectations. But
if you get like ISM and PMI services from a couple weeks back, weak. Jobless claims.
Let me be clear about something.
Let me be finished before you do that. Jobless claims are becoming more elevated. I mean, there are clear signs that the economy is weakening and that the labor market may actually be starting to weaken as well.
Yeah, it's the economy is going to weaken a little bit, but the recession, I don't agree that the recession is the base case probability. We at my firm have a 35% probability of that. The soft landing, by the way, is that the economy continues to grow as inflation comes down. Both of those things are happening right now. Now, Bryn makes the point, and it's very well made, and I fear this, that the Fed may just simply screw it up, that they may simply not accept that we have the soft landing right now. And we hear various Fed speakers say things like, well, inflation hasn't changed. Yes, it has. Over the last 9 months, 9 months, it's a long time. It's running at 3.7% on the headline. Forget PPI. So, look, my point is not that things can't weaken from here, but to go take the jobless claims, 248, 245, wherever that is. That's exactly where they were back in 2019 when we had an incredibly tight labor market. Okay, that's when you were having signing bonuses for people to start working at McDonald's. And my point is that all of this fear of the recession, we've been doing it for almost a year. It just isn't here.
Well, because there's such a tremendous lag effect. The Fed's going to raise 500 basis points, and there's not going to be much of an impact?
Should be some impact, but we haven't seen any. The GDP is at 2.5%. I mean, I'm just stating the facts, and I agree. Somebody's going to say, well, then Amy may well say, okay, let's wait 3 months. But I've been waiting 3 months for about a year now.
So, Josh, how do you want to address that?
It's an illusion from higher prices paid. It's not growth. It's people raised their prices over last year. Jim, if I sell you something for $10 this year and then next year charge you $12, is that 20% economic growth?
Keep going, Josh.
No, that's what I'm asking you a serious question.
Real GDP. I don't understand why you're talking in nominal terms. We're talking about real GDP growing at 2.5%. I really don't understand why you would go to prices paid.
Because what I'm suggesting is, are we talking about growth in terms of unit or unit price? And this is, I think, one of the more. Well, who cares is that?
Real GDP is the baseline of what we're all supposed to look at. It takes out inflation, takes out units.
I understand.
You know, we can't
I understand, but you know what doesn't? But you know what doesn't? You know what doesn't? You know what doesn't take those out? Same-store sales growth, for example, revenue for S&P 500 companies does not adjust for those things. So yes, you nominally do have GDP growth, but nobody that you talk to in the real economy, nobody that you talk to feels as though there's economic growth right now.
Talk to the airlines. They reported today. Talk to GPC. They reported this morning. Talk to Union Pacific. You know, this idea that everything's falling off a cliff just is not accurate to the facts.
I didn't say that. Why does it have to be one or the other? Why does it have to be falling off a... It's not falling off a cliff. It's slowing or decelerating or whatever euphemism that we want to...
Talk to anyone in the economy. Okay, I said in response to anyone in the economy, talk to the airlines, talk to GPC, talk to Union Pacific.
Which, by the way...
I'm just responding to your words.
Alaska Air
higher prices.
Real
why
GDP
is this complicated?
Is up 2.5%. You tell me why it's complicated for you to get the word real into your head. Real adjusts for higher prices. It's not that hard.
I have the word real, but we can't invest in... Because we can't invest in GDP. We invest in the stock of corporations. You can't buy GDP. So let's focus on what we're hearing from companies right now. They may be getting overly cautious, but I think they're doing a really good job at balancing what is obviously, airlines aside, obviously a situation where demand is cooling. That's what the Fed wants. The Fed will get its way. I actually agree with you and with Amy that the inflation picture has gotten better. It just takes forever. It's falling glacially and not at the same pace at which it rose in late 21, early 22. I understand all of that. I'm just making the point. The stock market is not yet fully reflecting what we're hearing from companies.
Yeah, there is D.R. Horton, CEO today, quote, spring selling season is off to an encouraging start. I mean, if we threw up the housing stocks, they wouldn't be telling a.
You know why? You know why? Because there's 1.1 million houses available of supply, which is significantly lower than the pre-pandemic period. There is no supply because existing home sales are down 22%. So D.R. Horton happens to be all of the home building stocks. They look incredible right now because we have a supply deficit nationwide, most major metro markets, and that's not really going to change no matter what. So I wouldn't look at new home sales as being a gauge of anything. We just don't have enough houses.
What do you want to say, Jim, about autos? You know, off the Tesla margins, Ford, GM getting hammered today on concerns of an auto price war.
Yeah.
Right? You no longer really have supply constraints, but you may have demand issues, and thus you're going to have prices continue to come down, and that's ultimately going to hit the bottom line for stocks that really couldn't get out of their own way in the first place.
There's a price war in EVs. There is, and it's initiated and continuing by Tesla. That's fine. You know, in terms of internal combustion engines and the pickups and the SUVs that Ford and GM are selling, and that's where the bulk of their business is, that the demand is still there. It's still very, very high. And actually, GPC's earnings today indicate exactly why the demand is there, is because the average age of the autos on U.S. highways is at a record. It's about 12.5 times. They're falling apart. People need new cars. You actually want volume at GM and Ford to be picking up to meet that demand, almost similarly to what Josh is just saying about the housing market. You want new cars to be produced as fast as they can get the chips to meet that demand. It isn't going away, even if Tesla has initiated an EV price war.
You know,